Hello and Happy New Year, everyone. This is Jesse Kovacs from Kovacs Wealth Management, here with an educational economic update for January 2017. In this month's video, we'll discuss some of the major headlines that influenced the financial markets in December and provide insight to what these might mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Well, in the final trading days of 2016, the market rally we've seen since the presidential election has calmed, as all three major indexes posted losses for the week of December 26th. Now, despite this dip in the S&P 500, the Dow, and the NASDAQ, the indexes were actually each up over 2% in the month of December. Now, the year-end results were positive for the markets, with the S&P 500 adding 9.5%, the Dow adding 13.5%, and the NASDAQ increasing 7.5%. A great year for the financial markets. Now, arguably the absolute biggest economic event we experienced last month in December was the Federal Reserve's much anticipated interest rate increase. Now, on December 14th, the Fed raised benchmark rates by 0.25%, which was only the second time they've increased rates since 2006. Now, Chairwoman Janet Yellen explained that her group's decision basically reflected the economy's progress as well as their expectations for continued economic development. Now, the Fed also indicated that they might introduce 3 additional interest rate increases in 2017, which is up from their previous prediction of only 2. Now, unlike the market volatility after the Fed's last interest rate increase in December of 2015, investors had a much more subdued reaction this year. Now, the VIX, which is a main measure of volatility of the markets at a certain period of time, increased somewhat in December, but ended 2016 32% lower than where it began last January. Now, ultimately, rising interest rates are a sign that the economy is actually growing. Last month, we saw several indications of this growth, including the final report on third quarter gross domestic product, or what we call GDP. Now, in the Commerce Department's analysis, they adjusted the GDP up to a 3.5% annual rate, showing the fastest economic growth in over 2 years. Now, GDP wasn't the only economic measure that beat expectations in the month of December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Now, consumer sentiment, which basically measures the consumer's view on the current and future state of the economy, actually reached its highest reading since January 2004. Now, measures of consumer confidence also hit a 13-year high, indicating that people feel more positively about business conditions, employment, and family income. Now, in addition to these positive signs, we saw the dollar hit a 14-year high on December 20th and actually end the year up 3.8%. Now, crude oil also continued to recover as investors anticipated that OPEC and the other oil producers will begin to reduce their output in 2017. But of course, positive economic indicators don't mean that everything is perfect out there in the economy. Data released in December actually showed decreases in durable goods orders, industrial production, and housing starts. Now, we don't like to see these declines, but the biggest economic question marks may not come from existing data and instead come from changes in our political leadership. Now, stocks have rallied on hopes that President Trump will actually reduce regulation and taxes while increasing infrastructure investment. But no one knows for sure. And what changes could be on the horizon or how Trump's policies will affect trade are kind of a question mark. So as we begin 2017, we'll be watching closely the economic data and the political environment. We'll also turn our attention to the upcoming fourth quarter and the end of the year results to learn more about how the economy actually performed in the final weeks of the year, while closely monitoring what's going to lie ahead. So stay tuned for next month's video update, where we will have all of this annual data to discuss with you. Well, that's it for this month's educational economic update. Once again, this is Jesse Kovacs with Kovacs Wealth Management, signing off for the month of January 2017. Please remember that nothing we talk about here is a recommendation, If you would like to discuss your personal financial situation, please give us a call at the office at 732-306-8100. We'd be happy to talk to you. Take care.